Hello friends, this particular video we will discuss the problem number 2 under profit under the limited liability partnerships. In that last video we discussed about the problem number 1. In that we solved how to calculate the purchase consideration. Then we have studied about the how to prepare the ledgers and the balance sheet. It is a statement of assets and liabilities. Now, problem number 2 that we are going to learn in this particular video. So let us discuss problem number 2. Everyone has a PDF. Bring the PDF now in front of you and see the problem number 2. R and K were equal partners in a firm. Their balance sheet as on 31st March 2022 as follows. Liability side, R's capital 1,10,000, K's capital 40,000, sundry creditors 50,000, loans on mortgage dash total 2,20,000, building 1,28,000, furniture 12,000, debtors 32,000, less RDD 2,000, outer column 30,000, stock 36,000, cash 14,000, total 2,20,000. On the above data, they converted their business into limited liability partnership on the following terms: to take over debtors at rupees 28,000, stock at rupees 44,000, furniture at rupees 8,000, building at rupees 1,40,000, and goodwill at rupees 44,000. B. To take over sundry creditors from whom a discount of rupees 4,000 would be earned. To take over mortgage loan along with the unrecorded interest of rupees 2,000. Resolution expenses were rupees 4,000. Calculate purchase consideration and open realization account, R and K's capital account, LLP's account in the books of form. This was a Mumbai University problem. This was asked in March 2019. Now here in our problem, mortgage they are provided, but mortgage dash is there, but it is not a dash. It is around mortgage amount is around the 20,000 is there. So mortgage value that you have to keep 20,000. So these things that you have to mention here, this will be the 20,000. Mortgage value is 20,000 is there. Clear? Mortgage 20,000. This particular value that you should keep this 20,000 loan from mortgage, and that you have to keep in mind. Now, uh, here in this particular problem, again we have to calculate the purchase consideration. There are total two partners, R and K, equal partners in the form. It means the profit sharing ratio is equal, and they converted this partnership form. They converted into LLP, and they take over the debtors by of rupees 28,000, stock 44,000, furniture 8,000, building 1,40,000, and goodwill 44,000. So these are the assets they take over at aggregate value, and creditors also they discounted. So let us discuss about the how to prepare the purchase consideration. So here in the books of R and K calculate the purchase consideration. all asset taken over at agreed value or book value. So here, whatever assets are there that we have to keep in a agreed value, debtors, stock, furniture, building, and goodwill. Why we will keep these things? So if you see that debtors value is 32,000 and this particular 32,000 RD is 2,000, amount is 30,000. From this 30,000, if you see that they are provided the debtors value 28,000. So we will keep debtors value 28,000. In our problem, stock is 44,000. So we will keep the stock 44,000. Because book value was 36,000, but agreed value was 44,000. 44,000 we will keep as a stock. Furniture 8,000. Furniture value was 12,000. It is a book value and agreed value is 8,000. The agreed value we consider here 8,000. Building value, book value was 1,28,000 and the agreed value was 1,40,000. So 1,40,000 we put. Then in our problem, they are provided goodwill rupees 44,000. So we have to show goodwill 44,000. Then cash value is 14,000 is there. And this says that we have to deduct the we have to incur the dissolution expenses were rupees 4,000. So dissolution expenses we have to deduct from the cash. The total value of cash was 14,000 minus dissolution expenses 4,000, remaining amount of cash rupees 10,000. So here total we have to put inner column to outer column. It will be considered as a 2,74,000 is the total assets. We have to deduct the external liabilities. In our problem, they says that to take over the sundry creditors from whom a discount of rupees 4,000 would be earned. So sundry creditor was 50,000. From this 4,000 discount is there. So we have to record it after deducting the discount value and we recorded 46,000. Why we recorded 50,000 minus 4,000 discount. Then to take over the mortgage loan along with the unrecorded interest for 2,000. The total value of mortgage loan, it is also our external liability. 2,000 is the extra interest to 20,000 value of the loan of mortgage plus 2,000. The total value 22,000. So here total liability will be 68,000. Now, total assets minus total liability. So you will get the value. It will be 2,06,000. It will be considered as a purchase consideration. So I hope you understood the how we recorded the purchase consideration, total assets minus total liabilities. Then after that, if you see that in our problem, they says that you have to prepare open realization account, R and K's capital account and LLP account in the books of the firm. So we prepare here realization account. Then after that we prepare LLP account because LLP is a new firm account and one more account that we have to prepare, that is partners capital account. So these accounts we prepare. First of all, whenever relation account we will prepare, so all assets are transferred. Debit side, all assets are transferred. Now, what kinds of assets are there? These are the assets, all book value assets we have to transfer. So we will record it the all assets value. It includes cash 10,000 after deducting the dissolution expenses. 10,000 cash recorded. Debtors, debtors value 32,000. Furniture book value 1,28,000. Building 4,000. Buildings value 4,000. Here bidding value, it's not a 4,000, it's a 1,28,000. Bidding value is 1,28,000. 1,28,000. And furniture value was 12,000. Furniture value was 12,000. So we have to record the furniture value 12,000. Then expenses here, whatever amount of stock was there, this will be the stock is 36,000. You see that 1,28,000 building, then furniture 12,000, then debtors value 32,000, cash after deducting resolution expense 10,000, and stock rupees 36,000. Stock of rupees 36,000. These are the things we recorded in realization account credit side. Same way we have to record liability in realization account credit side. The liability includes rupees 24,000. The liability includes rupees, it's uh, 50,000 that we have to record here. Liability 50,000 we have to record. So we recorded the liability 50,000. Then after that, we have to record it one more liability is a mortgage loan. Mortgage loan also we have to record the value of mortgage loan. They are provided 20,000. So we should record the 20,000 also, the total. Then one more item we have to record because data is 32,000. It is debited to the realization account and RDD 2000. It is credited to the realization account as a RDD. So we have to put RDD value also. By RDD, RDD we have to consider amount of RDD 2000. We recorded. Then after recording this RDD, then whatever capital is there, R's capital 1,10,000, K's capital 40,000. It will be transferred to partner's capital account. Therefore, we already prepare partner's capital account by balance brought down credit side. We have to record R's capital 1,10,000 and K's capital 40,000. It means this particular balance sheets, all items are recorded, all items are posted. Then after that, we have to write the purchase consideration value. Where we have to write the purchase consideration value, the realization account credit side, and we have to write by LLP account, and we have to put the total value of purchase consideration. And we got the total value of purchase consideration 2,06,000 that we have to put as the LLP account. Always purchase consideration relation account credit side. And same things we have to record LLP account debit side to realization 2,06,000. Then after that we recorded everything. If you see that in our problem there is no any kind of information, but uh, there is no information about the any asset or liability taken over by the partners, and we recorded everything. So what we have to do now, we have to close the books of records. Only thing is there, all this thing it is taken over we have considered. So we should close the books of records. So first of all, we have to close the realization account credit side. We got the value that is 2,78,000. From this 2,78,000, we deducted the amount. The rest of the value will come 56,000. And this 56,000 we will distribute it among the partner as per their profit sharing ratio. It means this will be the 28,000 and this will be also 28,000, and total value of profit 56,000. This for the profit transfer to partners capital account 56,000. Their profit sharing ratio is equally. That's why we transfer 28,000 up to R and K's 28,000. So when once we transfer to partners capital account, it we have to show partners capital account credit side by realization. See that credit side we have to record it by realization profit. Okay. Then after that we have to close this partners capital account credit side 68,000 hours total case total 68,000 hours total 1,38,000. Then we have, debit side there is no value. So whatever value come, it will be the balancing figure. This will balancing figure we have to transfer to the LLP account. So we have to write balancing your LLP account 1,38,000 to hours and case 68,000. Once we transfer to LLP account, it will be credited to LLP account by capital accounts. Ours 1,38,000, K's 1,38,000. Then we have to close. So both the side will be tally. So this way we have to prepare this account. After recording this, see that you can they are not say that you should prepare the balance sheet. Only thing is there. The question was there. If you see the question, calculate the purchase consideration. We recorded relation account, RS and case capital account, and LP account. Also, we recorded. So I hope you understood this particular problem. Okay, so we will discuss the further problem in our next lecture. Okay.